In the energy quadrant, crude oil again rallied pretty strong. It had gotten into a big sell-off the last couple of days, but today we rallied up 1.75%, only to push lower in the last 2 hours of trading, finishing up about 1.25%, about 53.07 on OPEC cuts. The confirmation of the cuts everyone knew is coming. A report revealed that OPEC cut production by 800,000 barrels. It's about 100,000 more, maybe 150,000 more than was required for the January time period. We already know Saudi Arabia cut oil production in December, so this is the continued process of getting these rate cuts going to that 1.2 million barrel level. And if Azerbaijan is correct, it will be extended to go even further than that in terms of time, not necessarily in terms of barrels. We also have a deal to avoid a government shutdown in Congress, at least a deal in principle. It has to be put on paper and voted upon in Congress. Supposedly they have the votes to send it to the president, and the president said he's not happy, but most analysts think he'll sign it. And consumer demand hopes are stoked by this deal. There's going to be no government shutdown, so theoretically there won't be an added pressure on U.S. consumers who would purchase gas in the upcoming summer driving season. We won't have those 800,000 unpaid or furloughed workers in the government or from the government to weigh on demand as we come slowly into the seasonal period of strength for crude oil, which is mid-February until about late March. That's approaching quickly. And then the dollar itself still range bound despite today's jump. Crude oil stays in that same range. So crude oil has been ranging basically between 51.50 and 54. Didn't break out to the upside, didn't break out to the downside with yesterday's sell-off. Again, today rallied but sold off in toward the end of the day, finishing about 53.07.